Rohan Verma, the CEO, Executive Director, as well, MapmyIndia joining in. Thank you so much. Let's discuss the outlook for FY24 because revenue stood at about 379 crores. You've got an order book at about 1,400 crore rupees. What is the revenue growth that you see over the next 2 years?
Morning for having me on your show. We've put it out there that by FY27, FY28, we're looking to cross a milestone of about 1,000 crores in revenue. And if you see the past 3-4 years track record, we've been growing at a CAGR of about 38%. And this growth is broad-based, whether automotive sector with the whole connected vehicle and EV and now ADAS phenomena, or in the mobility, whether logistics or taxis or people or goods movement as the economy expands, that is increasing, or even corporates or government looking to digitally transform, and new age tech companies which are hungry for technology in the emerging areas or the fast growing areas that we play in, which is maps, IoT, drones, analytics, navigation, etc.
Right. Rohan, tell me, what kind of a opportunity could emerging mobility, be? Because many on the street believe that this is going to be a bigger game than core auto.
Automotive as an industry itself is becoming mobility, meaning that they have to offer mobility solutions to their consumers, whether personal vehicles or commercial vehicles. And so we're providing this whole N-case suite: navigation, connected vehicles, platforms, ADAS, shared mobility platforms, and electric mobility platforms. And this is maps, software, and hardware that we're giving them that enables them to become, let's say, let them disrupt themselves and become new age players. While new startups are coming in, the legacy guys know how to make the best vehicles safely, etc., manufacture them at scale. But the technology piece is something that we can provide them, so that in the end, consumers or commercial fleet owners get the best tech enabled experience and a mobility solution that is personalized to them, that is energy efficient, that is safe, and that's kind of a convenience, or like a computer on wheels.
Okay, now in FY24, your revenues, were at about 379 crores. We spoke about the overall order book as well. Just wanted to also understand a little bit more when it comes to what the outlook is on your acquisitions, because G-Tropy, that's been fully integrated. What kind of synergies are you expecting in FY25?
Sure. There's a lot of growth opportunities ahead for MapmyIndia if you look at the areas that we play in, which is maps, IoT, and drones. It's essentially what we are trying to do every year or every few years is unlock more addressable markets for ourselves. Actually, a lot of what we do is organic, meaning that for 30 years we've built deep tech products and platforms in various areas. We're continuously innovating new products and new solutions, whether for enterprise, automotive, government, or even consumer. But the go-to market is what we unlock kind of every few years in terms of our delivery capability, our go-to market in terms of sales motions, etc. So there's few more areas that we're deeply focused on that you'll be hearing a lot about, which is in the data analytics and consulting focus to help companies and organizations digitally transform through the power of analytics. And also on the hardware side, we're going deep into design and engineering for automotive tech or even on drone tech, so that they can be made in India, truly designed and engineered, and then made in India solutions around that. And finally, on the consumer side, MapmyIndia has seen phenomenal growth of our Mapples app, which is enabling now 2 crore people have downloaded the app on their own volition. And we're adding tons of capabilities beyond maps and navigation there, around travel, around local, and those things will kind of bear out in the years to come.
Ron, good morning. This is Vinny joining in the conversation as well. In FY24, when you look at it, your order book, you've seen a lot of large order wins that came in of around 400 crores from Hyundai, Kia. Any such order books in the pipeline? Can we expect something in this quarter as well?
We usually have really large funnel because you can imagine that we work with all the blue chip companies, with large government organizations in the defense also. We've been working and we've been seeing growth. So yeah, the funnel is full of large opportunities, it's full of medium-sized opportunities. And really in the enterprise world, some things take longer, some things happen quicker. So we're quite excited about both the order book and the funnel that we have. But of course, it's, we have to execute and the market has to kind of accept the solutions that we have. We'll see how the order book pans out this year. But as we stand today, we're quite excited about the demand and the opportunity ahead of us.
Right. Also, Rohan, about the share of subscription in terms of revenue that has increased to 40% in FY24 from 28% in FY23. Where do you see this number to be in FY25?
What you're talking about is the IoT-led part of our business. Our map-led is primarily subscription-based, and that's a large part of our revenue, about two-thirds of our revenue in any case. But on the IoT-led, what we've said before also is, look, selling the device is enabling a vehicle or a fleet owner to have an IoT device built in, from which data comes in, and we run analytics and alerts and all of those things so that they can do optimization, they can do monitoring of their fleets and their shipments and their transportation of their people or customers. And so the IoT-led sale leads to continuous SaaS income, which is a high margin business. So over time, it's a balance of how much new business we're generating by deploying more devices for our customers, and then the SaaS income kicking in from existing base of customers plus the new customers. So over time, the SaaS portion has increased and will increase, but also it depends on how much more growth we want to drive in that IoT-led business, because the opportunity is fairly large. But we want to be careful about which opportunities we go after. We're profitability conscious, and that shows up in our margins so far. But we're also growth hungry, and because we see a large addressable market in front of us.
That's good to know. And there was also that recent partnership with Boat for the smartwatch. What does that bring to the table in terms of revenue for you?
These are super partnerships. Boat is like a phenomenal Indian brand, which is offering kind of great consumer gadgets, especially in the smartwatch segment. And really, this partnership shows the power of two Make in India brands innovating. Because, on the Boat watch, you can get turn-by-turn navigation to any destination. You can walk, you can run. It's easy to communicate between two people where to meet exactly, and then so there's less confusion. And that shows the power of our SDK, our APIs, that can be integrated by any device manufacturer, any app, in fact, so that consumers can get the best kind of navigation or mapping or app experience. I don't want to comment on specific revenues from specific customers, but suffice to say that this is our OEM, B2B2C type of business, tech-enabled companies sector, and these are, of course, fast-growing businesses for us.
Rohan, just in terms of a word on your margins, because given in Q2 FY24, it was at 45%. By the end of the year, we saw it going down to 37%. What is the outlook for margins in FY25?
If you look at the track record, and we've always maintained that, at least in the past, that we're looking at a 40% plus EBITDA margin at the annual level and 30% plus PAT margin. The focus really is between growth and margins. And so we don't give out numbers by quarter, and also we don't look at it on a quarter by quarter number. We look at it at a annual level. And also we have to kind of balance that out with our overall kind of growth ambition. As I said, IoT-led leads to low margins initially, but SaaS income subsequently. And you've seen that play out in the increase in the map-led margins are 50-55% plus. But the IoT-led margin, you've seen that increase from low single digits to, I think, 18% in the final quarter of the year.
Rohan, less than an hour for the markets to begin trading, and your stock is up already 10.25%. What do you have to say about that?
I think our focus continuously is just on executing on what's in front of our plate. It's about building great products, building great platforms, servicing customers, focusing on growth. That's really what keeps us up all night and all day. And the rest kind of plays out based on the kind of track record of the business and kind of what the good work that our team is putting in.
Absolutely. 200 points up in the green for MapmyIndia, 2200 plus on the stock. Rohan, good chatting with you. Thank you so much for taking the time out.
Thanks for having me.
Okay, let's just move.
If you like this video, then like, share and subscribe to ET Now.